I'm Matt Bouchard with NAREITsREIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Senior Vice President of Research and Economic Analysis. Calvin, thanks so much for joining us.
It's nice to be here, Matt.
So the financial markets have been exceptionally volatile the last couple of weeks. How is the underlying economy performing amidst all that chaos?
Matt, the underlying economy has been resilient through all the market tremors. The market's been worried about two things principally. One has been here for quite a while, the fear of what's going to happen as the Fed begins raising interest rates. And the other is the new twist about China and whether that signals a weakening global economy. The good news is the underlying economy is solid, and there's little that a gradual rise in interest rates or the weakness abroad can do to derail the economy. We saw the GDP growth snap back pretty sharply in the spring. We've seen sustained consumer spending. Auto sales in August were very strong. We've seen, and that's a key part of consumer spending. In sum, the underlying economy looks quite good. Some of the most encouraging news, though, has been in the housing market. We've seen sales of existing homes rise back to levels we haven't seen since before the crisis, and you can't overemphasize too much how important housing is in the overall economy. It's not just the construction, the jobs for building homes, the furniture and appliances that people buy. It also helps household balance sheets, gives consumer confidence. It's a real linchpin for the overall economy. And what we're seeing now is that has come back with a degree of strength that suggests the economy could begin firing on all cylinders again finally.
And sticking with housing, we're starting to see housing prices also starting to rise, which has some analysts concerned about another possible bubble. Are you worried?
No, I'm not worried about a bubble. There were a lot of things that were present in the run-up to the crisis that just aren't there today. There was a growth of very rapid growth of subprime mortgages, a new untested product, and that pushed overall mortgage debt growth to 10, 12, even 15% rates. Underwriting standards weakened so that people who really couldn't afford to make the payments got loans. There was a construction boom. There was a huge amount of oversupply that came along. None of that's present right now. Right now, if anything, underwriting standards are on the strict side of normal. Mortgage debt outstanding has not been growing at all. The household debt service burden is the lowest it's been in 35 years. So households have deleveraged, lending is conservative, there's no big construction boom. So what we're seeing with the recovery in prices is actually just recovery in fundamentals in a market with little new supply.
So we've talked a lot about the residential real estate market. How does all this news impact the commercial side?
Well, this news shows that the underlying economic fundamentals are solid, and commercial real estate markets actually improved quite a bit this spring. We're seeing rising occupancy, and that's supporting rent growth. And together, we reported recently, the NAREIT tracker showed that funds from operation, FFO, rose 16% in the second quarter. So those are good, solid results. What it means going forward is the fundamentals remain in place. The best thing for REITs in commercial real estate is steady, solid economic growth that generates jobs and consumer spending. The improvement in the housing market just removes one of the roadblocks that have been keeping the economy from firing on all cylinders. And now that that's gone, it looks more favorable going forward.
Calvin, thank you so much.
My pleasure, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.